Hey, it's Richard Matthews with Matthews Wealth Management, back at church, still working on that building. We're on May 2023 doing the asset class performance. Throwing this together real quick, so sorry if the angles and lighting and all that's weird. Audio as well, I'm not sure. But let's jump right on in here. NASDAQ, we're going to cover NASDAQ here. If you remember, we've had a good January, bad February, good March, boring April. And you can see things kind of took off here through May and now into June for NASDAQ. Debt ceiling is one of the biggest things. They decided to print a lot more money, and we all know that goes to large cap growth. Apple, Amazon, Google, that fun stuff. So here we are, and we're going to watch NASDAQ take off, up 30% on the year, because why not, right? That's just the way the things go nowadays. S&P, they're doing the same thing, basically, same shape at the end here. Taken off, especially in June. I mean, June 2nd was when we officially signed into law the debt ceiling solution, whatever. But we were up 15% on the S&P, which obviously didn't get the full benefit as the growth stocks do always. So here we are. Dow Jones moderate, same shape as everything, obviously, but throwing bonds and other asset classes in here, only up 7%. So if you were willing to roll the dice in January and put all your stuff into tech, you did great. You made 30%. If you were reasonable with how you manage money, you only made 7%. So yeah, it's kind of like a casino, isn't it? I mean, I've heard that before. Shouldn't be, but that's the world we live in. So moving on to just asset classes, and you can just tell what's up here. Large cap, and especially just growth. So large cap's up 23%. Mid cap growth is up 9%, so small cap growth up 4, 2, and 0. That's a backwards distribution as usual. Again, free money goes to large cap growth. Speculate, right? People who are looking for dividends and the safe returns are getting hammered. Big surprise, right? Gotta love that. Fed and Treasury and how they look after the reasonable stuff. Shouldn't be like this, but I'm going to try to not rant in these. These are meant to be just informational stuff. So who's shocked? Not me. International, a little backwards. This is actually a little bit of clarification of what we were talking about with the currency, and specifically euro and yen. Emerging only down 1, international down 4. And go figure, right? I mean, technically I'm doing May. These are at the end of May. I know what's happening. It's mid-June right now. It tend to be a 2-week lag on getting these things done. But since we passed the debt ceiling, obviously the dollar's not worth as much. We should see a pretty good rebound in June. You can quote me on that. That's the benefit of all of this stuff, is I put my money where my mouth is, or at least document my beliefs and theories on how things work. But yeah, that's not normal to be down 4 while emerging is only down 1. And I think a lot of that is that emerging market currencies are less tied to bad central banks. And I guess I'm saying that ours is a good central bank. By the way, the Federal Reserve is a central bank. So central planning, Marxism, socialism, whatever. Nobody cares anyway. So short-term bonds, all bonds, negative for the month. Who'd have thought that? And remember, leading up to the debt ceiling issue, this was the concern, was are bonds going to default? Of course not. You know, they're not going to do that. And I wish they would. You got to see my video, my thoughts on it. But yeah, we're still positive on the year for bonds. And a lot of that is just the recovery from last year. But in the last month, not much has happened. It's rebounded slightly in June, but not a huge deal. Nobody cares as large cap growths take off, right? Who wants to make 2.2% on tips when you can make 30% on Amazon or Nvidia? And that's the real driver for this. AI seems to be the new fad, which isn't even AI. There's no intelligence in it. It's literally a search engine, and it just guesses on wording. I mean, this isn't, they've now coined a new term, artificial general intelligence, AGI. That's the real AI, right? We used to have AI as an actual term, that it could think, it could do things. We were worried about, you know, was it sentient? Did it have feelings and all that? That's not what this stuff is. ChatGPT and all that, that's just mixing stuff together. There's nothing original in it. In fact, that's the problem with the bias behind it. Blah, blah, blah. Commodities. Hey, Richard, the other Richard, look what I did. I put Bitcoin in here. Let me get out of the way. I'm all tight framed here. I hate this. Bitcoin, yay. And we see why you wanted that, right? You like that 60%, don't you? As you should. And when we had banks failing and the BTFP and all this stuff of, oh, my money is not safe and I need to buy gold and silver and Bitcoin. Yeah, it took off and now it's down. That's shocking to me, honestly. I figured that as large cap growth goes, so does Bitcoin because it's just a tech, right? It's a tech company of some sort. If you want to go there, it's a debate. Okay, take it with some salt, whatever. But my belief is that the correlation in large cap growth and Bitcoin are the same. And today it's up 2.4%. So there's some truth to that. But this is shocking to me. I thought we'd be a positive on the month. Maybe if we had defaulted, and that's why people were hedging their bets there, whatever. Real estate's down 4, gold's down 1. Oil got hammered. Why? Why would oil get hammered if we're about to print $4 trillion into the economy? We'll see. So now got a commodity currency thing in there. And then if we look at everything, NASDAQ's up 24. This is as of the end of May. And then you've got S&P up almost 10. You've got the moderate up only 3.26. And then we are trailing that even because we have a large cash position. Boo. That's what you get by playing it safe. You don't get this craziness, but you also didn't lose 30% last year. So we're making money on preserved money slower than the people that ride the roller coaster. I still don't like that. I want that to be higher than that, but I know we're not in that realm of volatility. So, good luck picking a benchmark nowadays. So that's the last slide of this. I'm going to do the M2 balance sheet thing next, but that's asset class performance for the month of May. If you've got any questions or thoughts, feel free to reach out to us. But yeah, drop a comment once or twice if you're watching this and interested. I would like feedback. I'd like to know what you like and don't like. That helps me not waste time. So hope you're doing good, and we'll talk to you soon.